I think what's very interesting to note is just the drive and the surge that we've had in turnover and the foreign investor participation on the markets. What are you making of the positive trade that we've had for the longest while now over in Nairobi?
It remains very constructive. I think we're up about 12% on the NSE 20, just over so far this year. I think we'll end up 30% at year end, which is a call I made early in the year. It's really being dominated by foreign investors, as you correctly noted. And I think it's a macro trend where international big pension funds are increasing their allocation to sub-Saharan Africa. We've seen good performances in most sub-Saharan African markets, including yours. Nigeria has rallied sharply. And I think it's a macro level allocation, and it started off in the big cap stocks like EABL, Safaricom, which have all hit 9 and 10 month highs of late. But I'm seeing better breadth and better depth now in this move higher, which is also constructive.
Let's take a look at foreign investor participation. Which stocks are they buying into? Which stocks are they most excited about in Nairobi right now?
Well, I think East African breweries is a no-brainer. Foreign investors have found the brewing and sector across the African continent a very sexy one for some time now. They continue to add to their positions. Safaricom, when I checked last, had seen a 10 percentage point increase in its foreign shareholder percentage on its shareholder register 6 months through the last time I checked. They've reached for the big cap stocks. Kenya Commercial Bank up 43% this year, closed at a fresh 10-month closing high, as you noted. So they've really gone for the sort of big cap stocks. They've found them undervalued, and they continue to reach for those. But I'm now seeing, some of that spilling over into the stocks like Mumias, Kenyan, which have all had good rebounds in the last 2 to 3 weeks.
Let's focus in on East African Breweries and the prospect as it gets a new CEO. Guinness Nigeria's CEO will be moving ahead and across to East African Breweries, while Seni Adetu going over to Nigeria. I know that you have friendship with Seni. What did you make of that news?
Well, I think Seni was an outstanding leader, ex-dividends, over 2.5 years. He's created an increase of about 69% in the share price. He's delivered value to his shareholders. My only disappointment around Seni's departure, and he's obviously going on to better things, is that he won't get to read out his full year results. Those full year results are going to hit the ball right out of the park. First half, EPS was accelerating 37%, and he's got a windfall gain to book at the full year mark from the sale of Tanzania Breweries. And I think that's my one disappointment, but it's a very well-run organization, lots of strength on the bench, and I continue to see it outperforming and catching people's attention.
Of course, Safaricom will be in focus this week. A lot of trade expected around that stock, as you note there, an increase in foreign investor participation in the counter. But what are your views on that stock price? Because sitting at 3 shillings 45, as you said, a 9-month high or thereabouts. What are your thoughts on the prospects for that share price as we have those full year earnings coming to the market?
Well, Safaricom, as you said, are going to report first thing Thursday morning, full year results. But really the full year results were a game of two halves. The first half was a torrid period of intense and irrational price competition from its competition. And we saw that in the first half results. But I think the second half is going to show much more muscularity. I think investors will like the growth. They'll see, voice revenues, which remain the biggest piece of the revenue pie at about 67%, were repriced 6 months ago. So I expect these results to beat consensus estimates, and I think we should move towards 4. I think Safaricom has seen off, the toughest part of the competition, and I suspect investors are going to like what they see in M-Pesa and particularly in data.
And in terms of the overall telecom space, Airtel coming out saying that they're going to keep rates unchanged even as that MTR is set to be reduced. We've got quarter-4 numbers expected. We had quarter-4 numbers rather coming out from Bharti Airtel, and the African business suffering in terms of ARPU numbers. But what are your thoughts on Airtel's decision to do that and how that might impact a Safaricom in terms of price wars possibly?
Well, I think, the story about Airtel, and this was recognized by Sunil Mittal, the prime mover behind it, is that, competing on price does not work in sub-Saharan Africa. And I think he pretty much admitted that in Barcelona. But it's very difficult for them now to turn around and reprice higher. So I think they're in a bit of a jam. They want to put the price higher, but clearly they can't do it just yet. And it's making no impact on it's making no impact anymore on Safaricom or the competition. People are looking for service, people are looking for other things other than price. If they save money on price, they will not increase their minute usage. They'll spend it on food, for example, or something else. I think they've got to get a lot more innovative. I think they've got to start leveraging their footprint across the sub-Saharan African continent and making it, the phone carrier of choice for Africans who are transacting across borders and who need that kind of a facility. I like their idea about going into the loan market and making loans. I think that's a very interesting and clever strategy and might well reap rewards.
How do you think that's going to pan out,
I think
Aly-Khan?
Airtel has basically surrendered on the price front. Well, the big, powerful benefit for Safaricom is the network effect of M-Pesa. In fact, hardly anyone left Safaricom to go to Airtel on price because they couldn't afford to lose their M-Pesa account. And this is a calculation that Airtel failed to make. But Airtel money remains way too small. They need to scale it up in order to get those exponential benefits. I think this loan strategy is a good way of trying to do just that. So I'm keeping an eye on that. And I think increasingly we're going to see mobile operators start to encroach on the banks. And that intersection point between the banks and the phone companies is surely a fascinating space right now.
Yep.
And I see no reason why these phone companies can't really increase the menu that they have.
Very fascinating, as you say, something we're also tracking in Nigeria right now. But very quickly on the macro front, Aly-Khan from Standard Chartered, head of research for Africa there, is saying that inflation clearly decelerating. We know that the CBK chose to keep that key lending rate on hold at 18%. Your views on that decision, reading into between the lines from what you said, not happy and don't think it was the right decision for the CBK this time around?
Well, I think, we've seen inflation trend lower, much lower. I understand there are some internal dynamics within that inflation number. We are worried, admittedly, about the current account deficit, which is now has a 13 handle. But at the same time, this is a laboratory experiment. We have interest rates which are way too high, although the market rates are now moving. Bank lending rates have not budged. 2-year bond yields have gone down dramatically. And I thought that the central bank would have been better off making a small token cut at this point in time, which would not, I think, have damaged the shilling, which has been very resilient in a tight trading range. So I, for one, thought this time round they should have given the market something, because it's been a very, very painful exercise. 24, 25% borrowing rates. It's enough to kill any economy I can think of anywhere in the world.
Yep.
Just that because it hasn't killed ours doesn't mean that they should carry on with this strategy right now.